Hey everybody, this is Jim at SP500chart.com. It is about 4:30 on April 29th, 2013, and we're going to take a look at the S&P 500 chart. That's why we call it SP500chart.com, just in case you hadn't noticed. And we're going to use some time-honored techniques to try to make sense out of this. And we all know there are times when you can't do it. You can't make sense out of it. But there are enough times where you see things line up just so that you were able to make some pretty good calls. So we're kind of at a maybe point in the markets right now. But before we get into it, I need to remind you, and I'm going to see if I can do this in one breath. The website and the video are for educational purposes only. Nothing stated to the side or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Oh, that was one breath. Now let's take a look in a little bit more relaxed manner. Well, we talked over the weekend about the possibility of seeing a double-headed formation up here. And again, I'm not ready to call this a top. We're starting to see some things break down. We're starting to see rallies that don't surpass the previous rally by the same percentage that it was surpassed before. What do I mean by that? Well, what I mean is, like, if you have a series of tops and one of them is 3% higher, then the next one is 2% higher, then the next one is 0% higher, then you get the picture. The rallies are not able to produce a new high, so you start to get either a rounding over or you develop some type of topping pattern. Now, there are going to be a lot of people, especially because we're here at the very last of April and the old sell in May and go away thing. There are going to be a lot of people who are, just because the S&P got up into the mid-1590s today, are going to be saying, you know it, double top. And I'm going to say that is a possibility. But I will remind you that every point along a bullish path, there are multiple times when you could say double top. I'll give you an example. You could have said double top back here in the middle of December. Okay? You could have said double top back at about 1530 in early March. You could have said double top at about 1570 in late March. You could have said double top right here in early April at 1572. And because none of those ended up being double tops, I have to remind you, what sense does it make to say double top just because the S&P has rallied to the mid-1590s again? In other words, this could be a leg that goes up and establishes a new high at 1620. If you do it by the book, unfortunately, you give up some of your trade. But if you trade, quote, by the book, this would not be a double top until 1540 busts. See what I'm saying? A double top is not confirmed until you break the level that was in place before the start of the second rally that created the second top. Now, with all of that said, really today, nothing, I mean, we had a rally, but nothing really has changed in the way of the chart. We still have all of the significant lines in place. We still have all of the same trigger points identified, and you can see that that we came up and tagged this this line right here for a second back test, that might tell us that this is over. Okay, this could be a double top, but this is really the only evidence I've got to say that. And the way the S&P has been all over, under and above this particular line, I'm not willing to absolutely state categorically this is a double top. Now I will tell you I've got an order in for a short position in the 2 times leveraged inverse S&P 500 SDS, the ETF. But you know, if it hits, great. If it doesn't, then I'll wait until we start to get some things breaking down a little bit more. What am I trying to say? A little bit more evidence. I told you I was going to short on getting up to this 1597 high. We just didn't quite reach it. We didn't quite get that level, and that's where I've got my little buy-in for SDS. Now, I will show you that I changed this line. This had been based upon a series of 3 lows that were in place before rallies were touched off, and that made this pattern between these 2 light blue lines into another ascending wedge. But you know something? With what I saw today, this line gets moved. So to where this is now describing more of an upwards channel. Because since we set a high that is above that 1592 mark that was in place last Thursday, then I'm saying this is not this is not a breakdown and necessarily a back test. But I'm going to go with the safe thing and call this a channel now. So this is a line to watch. Obviously our rising yellow line needs to be watched. And I would also extend this horizontal line that is at about 1578. That's an important line of support. So really we're building up a lot of horizontal lines now that actually kind of, I think, will end up working to our favor as we start to see what's going on in the chart. But the most important one of all is this line down here that is roughly at 1540. If this does end up being a double top, then we would likely come down to this line, maybe rally a couple more times to make a right shoulder. Then the markets would be setting up a potential move to under 1500 into probably the high 1480s, maybe the mid 1480s as a minimum target. So guys, I guess that's about it for today. Again, I think, let me show you one more thing real quick. Just in case you're inclined to look at this little pattern that we rallied up in today. We rallied up pretty strong, and it was all within pretty much a channel until that channel broke. So in order for this rally to continue, this little thing that we saw happen during the last hour and a half or so today would have to break out over this top line here. Let's make that line green. So in order for this to keep on going up, obviously this might be serving as a bull flag, and if it is, we'll know, because that top line will get taken out, and it would have to get taken out pretty early tomorrow, or we break this line right here, and then we can start considering a little bit more seriously the possibility that we are looking at a double top here. But again, I just want to remind you, bullish channels and bullish markets are littered with things that people have called double tops that have ended up not being double tops. So I'm not ready to call this one a double top. I've got a little suspicion, but until it comes down and we take out 1540, this is not any kind of top. So I want to thank you for watching and appreciate your time, and I want to welcome new subscribers today. Thank you so much. I hope you get something out of this, and the markets are very interesting, and we try to bring some old time-honored techniques to bear on these modern markets, where others might be using MACD, RSI, stochastics, various computer-generated algorithmic driven trading programs. We do it the old-fashioned way, and I think you'll find out it works pretty well. It doesn't work all the time, but it works enough of the time to keep you out of serious trouble, and hopefully it works enough of the time to keep you in the black. So look, thanks for watching. Take care.